and you have the S&P's down. The SPX is down about 96 cents, as you can see right here. You still have volatility, a slight bid, but still hasn't broken through that $12 mark. You have bonds holding up 25 cents on the TLT. And then you have the commodity markets still holding up. And after that bullish API, American Petroleum Institute report, that's understandable. So what I wanted to talk about today is if the market is getting maybe a little defensive in nature, maybe things are a little bit extended. We've seen quite a bit of price action, especially after earnings, and just some uncertainty about whether or not policies are going to be instituted through the Trump administration. Wanted to talk about a strategy called the cover call. Cover call is one strategy that a lot of people have come across early in their career, especially if they start to delve into the derivatives realm, but don't get too afraid. Let's take a look at just some of the critical elements of what a cover call is. Well, first of all, you have to have a market outlook where you're either neutral to slightly bullish, okay? And since the market might be getting a little defensive, I wanted to look at a couple sectors, and one specifically that might benefit in two environments. One is uncertainty about yield or interest rate, and whether or not rates are going to continue to go up and at a pace that's going to be paying individuals that are looking for yield. The other segment of the market that I want to look at is sectors that pay out big dividends. Because right now, if there is any uncertainty or if there's a little bit of a break or pause in this unbelievable move to the upside, yield stocks are going to be in the forefront. Dividend paying stocks are going to be in the forefront. So I want to look at those. Now, back to the cover call criteria, neutral to slightly bullish. Sectors that typically will hold up well when things get uncertain, or in other words, keep a slight bullish tint, is going to be sectors that are more defensive. And we're going to take a look at utilities. I also want a limited risk opportunity when I'm looking at covered rights. Reward, I'm willing to give up unlimited upside by owning an underlying. And so if I'm willing to have a limited reward or a cap reward, then a cover call could be something you could look at. And to do a cover call, you must own 100 shares. Now, tomorrow we're going to have an exciting discussion on Friday about an alternative to the cover call. Now, let's jump in and take a look at a sector and a stock that caught my eye. The sector is going to be the utilities. And specifically, I want to look at XLU. Now, I'm on the Morningstar site. I have no affiliation with Morningstar. The reason why I brought this up is XLU. I want to look at the key components of this market ETF that tracks utilities. You can currently see the yield and the performance. Now, the one thing that I want to look at is a stock that I may actually know. And as a matter of fact, as I scroll over this dot graph, you'll see there's a company called Exelon Corp. I get my electricity from ComEd here in Illinois. So Exelon Corp owns ComEd, and you see the year-to-date return for Exelon Corp, ticker symbol is EXC, and the portfolio weight of XLU is 5.29%. That's how much this particular stock makes up XLU. So I thought, well, you know what? This is a stock that I'm familiar with. As a matter of fact, I pay my utility bills every month. Here's some of the other stocks with their weightings. This is how I break down some of these ETFs and pick stocks. And this is a stock picking market right now. Trading overall market ETFs is difficult. There's low volatility. There's a lot of drag. So I'm not trading XLU, but I'm going to take maybe one of the key components, and I know Exelon Corp, so I'm going to take a look at that. So I jump into the MarketStream website, and the first thing I do is just look at the action in Exelon Corp. You can currently see that the stock has been consolidating for basically the last almost 3 months. It's had a few dips and a few drops here and there, but all in all, you can see that it has been trending in a sideways market. It's slightly bullish, and it's been holding its 200-day or long-term moving averages, right, at 34 let's see, that's right around 34.52 is support. Now you might ask, what is this orange line? This orange line is the XLU. I'm comparing it, and you could see that Exelon has actually been, on a percentage basis, performing better as far as its move to the upside. It immediately spiked, and you see that gap. Now, the other thing that I want to note is that it has pierced through and now trading above its 20 and its 50-day moving averages. That is important from the fact that it is in a bullish trend. Even though we see a consolidation, we have a short-term and intermediate-term bullish trend. If we can see the stock stay above this level, and I'm actually going to now remove XLU, if you can see that it's going to stay above this level right here of right around 35.45, right, which is roughly the 20 and the 50-day moving average, that is bullish, and that will be also a level that we're going to watch very closely as far as continuation of trend. So with this $35 stock on my radar, I see that the overall market on XLU has been to the upside. You see that Exelon has been basically neutral to slightly bullish, and now it's actually showing a short-term bullish sign. And if the market does get defensive in nature, or yield seekers look for a stock like this, which, by the way, Exelon does have about a 3.2% dividend yield. It did go ex-dividend this month already, and so the next dividend won't be for another quarter, but it's roughly around 33 cents. And and so what I want to do is take a look at potentially putting on a covered right. So what I'll do is I'm going to actually jump in and take a look at Exelon. Okay, so I'm going to go actually to the order ticket. I'm going to load up the Exelon option chains, and I'm going to look in April. Now, why am I looking in April and not March? I want to have time. Exelon doesn't have a ton of implied volatility. As a matter of fact, the implied volatility is relatively low. That's just telling you that there's not a forecast of a very large move between now and in the months of March and April. Plus the fact I like to look in that sweet spot of roughly around 45 to 50 days until expiration. That's April. So currently with the stock trading at $36, I'm going to look, first of all, what is the options marketplace pricing in for potential movement? A very quick and rudimentary way with a 50% probability of analysis is using the front month, or using the at the money straddle and the first strike out put and the first strike out call. Just add up the offers. It's really that simple. So the $36 calls, they're offered at $1.05. The $35 puts, 70 cents. You add those two up, that's $1.75. You take the $36 calls, excuse me, those were the puts, and that's $1.10 and $1.60. So that is $1.70. So basically you have $3.45 of total premium with the out of the money put, the out of the money call, and the at the money call and put. Divide that by 2, it's basically giving you about $1.65 estimated move between now and April expiration as of today. So that gets us in a range of basically between $37, almost $38 on the upside, and down to $34 and some change on the downside. And remember, our support level from the charts came in right here at this 35 level, 35.43, okay? And we're looking at it pricing in somewhere around here, which was the 200-day moving average, by the way, as potential support to the downside, all right? So now that you have that perspective and that range, I'm looking at maybe doing the buying the stock at 36, and that would be $3,600 for 100 shares, and then selling the $38 calls or the $37 calls. Now, I'll look at probably doing the, let's say, the $37 calls at this juncture, and I'm going to do it for right around 50 cents. So all I have to do is scroll up here, go to cover call, and what the system's just going to do real quick for me is basically give me all the cover calls for the month of April. And you can see the $37 call $37 covered call is going to give me a cost basis of $35.50. Now, this is a little math here. Basically what the system is doing is taking into consideration the potential premium I would receive, right? And subtracting that from my purchase price of the stock. And that gives me my cost basis. So that means that I'm buying stock at a discount, right? Now, what's the trade-off? The trade-off is when I buy the 100 shares, yes, I'm not buying them at the prevailing market price of $36. I'm buying them at $36 minus the premium I receive, which is 50 cents if I sell these $37 calls at 50 cents. That means my cost basis is actually $35.50. Okay? Now, what am I giving up? I don't make any more money on this stock after it goes above $37.50. That's the strike price of the option I have sold plus the premium I received. So $1.50 is the most that I can make on Exelon. Right now, the options marketplace with the 50% probability is only pricing in the potential of a $1.60, $1.70 upside pop, or potential upside pop. Now, it could also go down as well. With that being said, that means that basically if the stock goes above 37, I cap my profit off at $1.50. $1.50 is the amount that I've made on the stock plus the premium in the option. If it goes out at $37 or higher. Still, that's a 5% return, almost a 6% return in basically 56 days. And I'm going to put a limit order in of $34. Let's just put it in at, we're going to buy it at $34.50. Okay. We will review the order. And it kicked me out. And so I'll buy that at $35.50. If the stock goes above $37.50, that means I get to keep the profits from the upside, which basically is up to the strike price that I sold, which is $1.50. This is a great way, folks, that you can participate in these types of markets, and you can do it conservatively. And now I put up $3,550 for that transaction. That has to be somewhere for your smaller accounts, below $25,000. That's going to be a challenge. That's why tomorrow I'm going to talk about the poor man's covered call on Strategy Now. All right, folks, that's it today for the Strategy Now segment. Check out the Premium Toolbox. There's a ton of new components there that you can check out. And if you ever want to find the archives, they're right here under the latest videos. You can check those out as well here at MarketStream.live. And if you're looking for a new broker, you can always check out Trading Block, and you can reference my name in an email for getting any type of special considerations and rates. All right, folks, that's it right now. Join me at 3:30 Eastern Time. We're going to go over some stocks that are going to have some notable events, earnings. All right, we'll see you at 3:30 Eastern Time on Tech Talk.